Good afternoon. It is Cedar, and I have D Cruz here, I think, with us doing our Wednesday lunchtime session of Mind Over Matter, the psychology of trading.
Yes, I am here. How's it going, Cedar?
Good. How are you? Forgot to double check before I started the
Good,
recording.
good.
I
Oh
figured you
yeah,
were,
no,
though.
of
I
course.
figured we
Yeah,
were
no,
all
I'm
good.
always here, yeah, for majority of the
Easy
morning
peasy.
anyways.
Yeah.
Lunch, so if it's a boring later day, I tend to get off and that's just reserved mental. We don't have to sit here all day every day. So
Yeah, for sure. And we've
yeah.
been doing a little more talking in the Tuesday night sessions, the last two nights that I was there anyway, I think just kind of naturally. Oh, I am out of my SPY puts and my SPY short 52.71 and 74 cents for the exit on the SPY puts. Sorry. Okay, we can go back to that. I just got to get that alerted. I will let you start.
Oh yeah, no, you're good. Um I really do just want to kind of see this reaction to JPEL too. I'm all basically, yeah, pretty much all cash. Have a small trade open and a growth account and a Apple long, but um, yeah. So today, I mean, it'd be a nice time to maybe talk about what what psychology is needed with FOMC days, like today, maybe, like with JPEL. What's kind of needed. What I like to personally do, anyways, is basically just trade setups early, and then just based on the reaction that we get with Jay Pound, of course, whatever he's saying, and if it causes selling or buying, that's kind of what I base the rest of the day off of. I don't really like to be, in too many positions to where, it's really gonna fluctuate my portfolio. So I didn't really trade too much today, just really just minimal. Just we had a nice swing trade, and then we just had a nice day trade, and then that's really about it. Just kind of sitting on that. Futures, I haven't even really opened that account even yet. So but I think it's really key to just make it quick, and then whenever all this is going on, this is when you don't really want to be trading. You're just kind of guessing and lottoing right now, if you will. So if anything, just if you need to walk away
And
and
we knew about this
get away
ahead
from
of
the
time
screen.
because in Market
Yeah.
Insights,
Oh
I
yeah.
post the scheduled economic data every day, actually at the start of the week, so you have the whole week outlook. You can even just print them out, but then also again in the mornings. And so we knew about was it Treasury that was 30 minutes ago, and that there were going to be four Fed speakers. I think it's four, three or four, but Powell's in the mix of them. Powell will be talking in about 7 minutes. And so it's important to know, you don't have to know what the news is. I mean, you need to understand the difference of importance. It's more important when Powell speaks than when the other Fed members speak. I some of the some of the data pre-market is more important, some is less important. So, kind of learning that and studying it. And of course, listening to us because we talk about it all the time. Like, these are the ones I'm worried about. But you don't need to know what the impact's going to be. You just need to be aware that at that time, something could be happening so that you're paying closer attention. So you're not caught in one of those gigantic candles, one direction or the other, sit there just rocked back on your heels, reeling, thinking, what the heck just happened to me? A lot of times we'll be flat, which is what we are right now, right? So sitting out of our positions, watching to see how this unfolds. Powell was much more what I would consider neutral, or if you wanted to compare it to what he was in his FOMC speech last week, he was pretty dovish last week. And then Friday when he talked, or FOMC was the week before, I don't know, whenever that was in March. When he talked on Friday with the markets closed, more neutral, and in comparison would be considered more hawkish because of the language that he used. So you never know what he's going to say. You never know what the agenda is. So the whole idea is capital preservation. It's the name of the game.
Oh yeah.
So we had lots of questions last night about stops, stop losses, how you set them, how you handle them emotionally. And I talked a lot about position sizing. That recording will actually be up on the Bull Trades YouTube video channel. I need to check with Husky and see if he's gotten that uploaded. And the one from the previous week also had a lot of psychology. So if you guys are looking for more psychology content, that Tuesday night has been blending it in, and the last 2 Tuesdays have had a lot of psychology in them with me there. So definitely, if you're looking for something to just be running in the background, while you're sitting there watching price play out or waiting to trade, not a bad idea. But I'm curious just to have you chime in on your concept of how you manage position sizing and risk and stop losses and all of that, especially in relation to psychology.
Well, I think, well, I would agree that, just that that itself is that right there. If you oversize, it's going to be one of the most weighing things on your mental, because you're not going to be able to just let a position do what it's supposed to do, and that's how you learn. You're not always right, and you're definitely not always right away. So it's sometimes you enter prematurely or just a little early, right? So you could have just waited. But if you're positioned a little heavier, then it's not as comfortable to allow yourself to let the play out, right? So you're looking at P&L instead of looking at the charts, and then you're looking at your P&L and you're just like, oh man, this isn't good. I'm losing a lot of money. Well, you're oversized. If you're able to even just close your broker, know your position, know how you're sized, and give yourself enough time for the position to play out. If you're doing this correctly, then you don't really need to even look at the position. You can just let the charts play out. Continue doing what you need to do, or for those at work, you don't have to look at your phones and your charts and et cetera, or wherever your broker is. If you're on your computer, you could just have a chart up in the background, and just know when your invalidations are, know that you're sized comfortably to where, if this doesn't go your way, it's not gonna completely, burn your account. So that's kind of the mental that I have on it, and like the outlook, and kind of what I try to teach as well. For position sizing, you don't want to size what you're not comfortable with losing. So if you're sizing to where you're like, okay, well, if this goes to zero for some, crazy reason, and that's completely okay with me, that's a good size. But I mean, you don't want to let any position go to zero. Of course, it's just
That's your
knowing
maximum
what.
defined risk. And it's, you're saying
Yes,
exactly
yes.
what I said last night. So it's awesome. That
Mhm,
that's one of the reasons why we decided to go ahead and do this is we have a similar
mhm.
philosophy, which is just good trading account management from two very different
Right.
backgrounds, even though we grew up within 10 miles of each other, a decade and a half apart,
Pretty much.
strangely,
Yeah.
and then lived
Right.
within 10 miles of each other for probably a
Yeah.
decade, give or take. Anyway,
And that's just, yeah,
yeah,
crazy.
it is kind of
But
crazy. It's such a small world, and then we meet in bull trades like 2 years ago,
yeah,
two and a
but
half.
what brought us together, if you think about it too, is not anything, of what you just said. Is the success and the
Right. Yeah,
psychology
we
that
didn't
we
even
share
know.
of trading is
Yeah.
why we're here. Yeah, so that's just, that's the beauty of it, and I think that's the way to, there's plenty of ways to be successful, but this has worked for me. I used to size. And I used to grow accounts rather quickly when I was learning. I'd size heavy, and I'd be like, "Dang, I just
Look how much
tripled my
money.
account."
Yeah.
But then that
Yeah.
next week, well, there goes my account.
And it's gone
And
again.
it's just
Yeah.
like, dang.
One
So it's
one
just,
trade shouldn't make it, and
mhm,
one trade shouldn't blow it.
yep,
Period.
yep, make or break. Nope, I do not want those trades. You don't want to get in a trade. You're like, okay, if this goes my way, then my account's saved. If it doesn't, then well, I'll deposit next Friday, or next month, whatever the case may be. Or maybe never be in it again. But you don't want to do that. You
And
know.
and we learned this
Um,
in University of Hard Knocks, like doing this ourselves. So you guys listening,
Oh yeah.
thinking I keep making these mistakes. I've made them so many times that I don't even want to, we can't even talk about it. It's so many,
Mhm.
it's not just once or twice. And I just learned and like, oh, I've got that good self-control. It's because I have had so many trips to the spanking machine that it's now emblazoned in my memory. And I call it the spanking machine because it hurts. And once it hurts bad enough, you'll stop, you'll identify that looks like a trip to the spanking machine. Okay, all right. I'm going to just
Absolutely.
go over here. And, we do occasionally still take our losses. Our my win rate's sitting at 70% for trades that I've alerted in bull trade over the last 2.5 years. And I think yours is
Yep.
that or a little bit higher.
Likewise.
So, you know, right in that range, 7 out of 10 trades I know are going to go my direction, and 3 out of 10 are not. So, not letting those get out of hand, making sure that I've got stops on my futures trades, making sure that, you know, what I'm risking position wise. And we talked that 1 to 5% last night. That position, if it goes to zero, I'm not going to wake up with my heart broken over it. Now, I'm not going to probably let it go to zero at 5%, but it's not going to break my account. It's not going to be a game changer where I'm like, oh, I have no more money to trade, because it was only 5%. So on my 10K options account, if something goes horribly bad and I can't get logged into my broker, my internet's down, something happens that's emergency and I end up in the hospital, I only lost 5%. So it's creating a bottom of how much my risk is, how much I have exposed of my risk capital, which is why it's important that we're trading with just that risk capital. So definition of that is you don't need it for monthly bills. It doesn't pay your rent and you're hoping to make more to make it back. That's gambling. Doesn't pay for food. It is money that you're hoping is going to turn into profits, but that if it doesn't kill you, literally or proverbially, right? It doesn't take you out of the trading profession, and it doesn't make you so sad that you can't function. That's a sign right there. So if you're feeling like I can't go to the bathroom because I'm in this trade, you're either oversized, and we could add things in, like I can't go, you know, walk outside for a couple of minutes. Now, if you're scalping, that's different. I don't like scalping. I'll take the profit if I need to because it moved to my levels, but I don't like scalping because A, it moves really fast and it's pretty much impossible to teach. You have to be doing it off of your levels and hard for members to be able to follow and understand. So I'm looking for stuff that can be traded for a little bit of time. I like half an hour trades, hour-long trades, and they seem like they take a long time when we get into trading environments that are more scalping, or, you know, that 2, 3, 5, 10-minute kind of time frame. And so switching those gears, changing that when you're starting to see more of a consolidation range or different, I guess, just changing market environments, you have to be aware that they're going to be constantly changing, and your adaptation to what's happening in that time is what's going to make or break your account more than anything. So trying to trade a consolidation chop or range day like it's a trend day, or trying to trade a trend day counter trend, or like it's a consolidation day, especially counter trend, will just wreck you. So that identification is huge. And I do have a New Traders Bootcamp about trend days versus consolidation days if you want to find out a little bit more about that in the premium section under Bull Trades University. But what's really important is that you have to define how you manage those days. And some people just don't trade consolidation well. They just don't. Or they don't like it. Like, I scalp pretty well. I don't like it, so I don't trade it much, if that makes sense. Trend days are hard in a lot of ways because, like today, a bunch of people piled in long as we saw that little pullback down into value area high. And then there are the weak-handed longs, right? It's basically like hitting a piñata. They all fell out the bottom, which is what I was waiting for in that short position. So we have to be thinking about what are other people doing in the markets, not just ourselves. So we have to be managing ourselves. We have to be our own, basically our psychology doctor, right? We're our own psychiatrist when we're trading. But we also have to be thinking in our executions, what are the size traders? What are the larger traders who are moving the market around, doing, thinking, executing? Not because of my position, because my position is nothing in relation to those traders. But what are they doing? Where have they been long from? Where have they been short from? Where are they likely to start taking profits on longs like we're seeing right now, right? So I didn't get the bulk of this move because we were in that range and it happened so quickly on the news that what I started asking myself is, had I caught that at that 52, 56 range, which didn't meet my risk parameters, so I didn't. But if I was, where would I be selling? I would be anywhere near the T+2 low of day, which we talked about this on voice earlier, Cruz and I, 52.8225 is Monday's low of day. T+2 is 2 days prior. That is settlement on the underlying equities for SPY and ES and SPX, all the S&P 500 products. Their low of day from Monday is where I would be considering exiting, and probably as a front run, because I have a feeling I'm not the only one with that opinion. And if you look at a 30-minute chart, it was shy by $1.50, right? Definitely got front ran, the T+2 low of the day for profit taking. And now we're trying to make it back down about halfway back or to half back as they're selling. And they probably will sell themselves all the way back down to the cost basis of somewhere around the previous close or the overnight high. Because that's what I would be doing if I were scaling in, scaling out, or if I'd gone all in and scaling out, I'd be selling myself back to that position because I'm still profitable all the way back down using a scaling kind of method. And I usually trade all in, all out. But I'm thinking if I were long and I were them, how would I be managing this? And we're watching it unfold in front of our eyes right here. And it's kind of a tug of war between if you were short, as we rejected or couldn't make the T+2 low of day, where would you be taking profit? Where, AKA short covering buying? Well, it's before the previous high of day, before the overnight high, and before anchored VWAP, which happen to be 50 cents apart. They're really close together. So I consider that pretty key area of awareness. I guess we could call it support. I don't know that it will hold, especially with Powell speaking right now. But so far it is. That's why I went ahead and exited that position right actually in the range that we are right now. So I didn't have to sit there and watch it and watch the tug of war. Critical. Any thoughts on, do you think about what other traders, I heard you talking about it this morning. That's what made me think about it. What other traders are probably doing. I think you said, I bet there's thousands of other people looking at this exact same thing on their charts.
Oh yeah, yeah, no, definitely. I'm usually I usually try to teach that as well. Whenever we're just we're here to catch the piece. We're just here to catch a slice of the cake, right? We're not gonna our our pennies aren't gonna move the market whatsoever. I
Nope.
mean, even all of us combined with bull trades, I mean, we couldn't pump anything if we tried. So with that being said,
And we don't trade
we're just here to
the
get
small caps
yeah,
a lot for that reason, but
right,
also
yeah.
we're trading things that we can actually, we're not affecting. Even if everybody in all of bull trades traded it, we would still just be catching a ride on the train. We're not gonna impact how fast that train can go. We're just there for the ride.
Volume, yeah, exactly. Volume carries stocks, not my 10 not my 10 contracts. So I'm just joining the party, getting what what I can, and I'm joining not the full move. I'm just getting what I like of that move, what's good enough for me, the 25, 20, 25, 30, 40%, whatever the R there is, you're not holding for the whole, it's just, we're just getting our piece. So absolutely just kind of just see what money's doing. And whenever it looks, kind of like red, green, red, green, red, green, red, green, a lot of indecision, it's just sitting on hands for me. It's if
It's
it's all
messy.
green, well,
Yep.
I'll go ahead, yep, I'll go ahead and join the party, I'll go ahead and partake, so I gotta love it, and I gotta see where money's going. I have to see, where Wix, I'm always looking at Wix as well, and that's just buying or selling. That's really all that is. So you always have to see where they're selling and where there's buying, and just respect the day, go with it.
And you use 15-minute candles a lot. I use 5 and 30. And for me, the 5 is a compilation. It makes the 15, so I'm good at visualizing it. But if you guys are just looking at a 1 minute and a 5-minute chart, I would heavily recommend at least a 15. And I keep a 30 and a 4-hour because it's easy to combine the 30 in my mind and easy to combine the 5s. But please try to just not be in just the small time frames. It'll wreck you for sure.
I actually do a 30-minute primarily, and then I
Do you?
use
Okay.
10 minutes whenever I'm
Oh, you're 10.
range trading.
Okay. Nice.
Yeah. Right. 10 minutes, it's just 3 candles for that. But I'd like to see wicks with 10 minutes, just for like a lot of the primary scalp traders are on 10-minute candles. So just like to play that and just kind of look. I could look volume a little bit more closer
Yeah.
with 10 as well. So, but yeah, I never really go to 5. I went to 5 minute earlier just to show where there was buying back with that spy call. But just yeah, that was after the play. But
Nice.
primarily on 30. I agree with just letting moves play out and just being patient, letting the candle show us where it wants to go.
And back to that part about our piece of the pie or our piece of cake, as the case may be. It's I use this analogy all the time, but it's the same as robbing a jewelry store. You're through the window, and I guess this visual is big for me just because one of our neighboring businesses, this happened. They ran the car through the windows, the storefront windows, and they grabbed whatever they could because the car was then trashed. Like they totaled the car as they went through the storefront, and they grabbed and ran off on foot. So they just grabbed whatever they could stuff in their bag and left. They weren't worried about the jewelry that was left in the store. They got what they got, and that was it. And well, I don't feel like I'm robbing anyone trading. It's just part of taking that piece. It's the same mentality. It's that same concept of I'm here to take my share. I'm not here to take all of it. And good traders, especially great traders, rarely catch the top or the bottom because they're waiting for their levels. They're waiting for more than just, oh, I think this is oversold. I think this is overbought. We take our share or a share and are happy with execution. That's what we're after. Did I execute that well in relation to my rules, in relation to my parameters of how I trade based on what I've developed after many trips to the spanking machine? And not all trades that are losses are bad. A well-executed trade that's a loss means you manage your risk, and that's a good trade. So you want to really stay away from defining a loss as a poor trade or as a bad trade. Now, you want to try to understand what invalidated it, and is there a way that you can use that next time to spot that setup and be like, okay, this keeps getting invalidated for me. So maybe this doesn't fit inside my defined trading edge anymore. It could change. And then trades that are profitable, like the big ones, like 3x your account, like D. Cruz was talking about earlier, just because it's profitable doesn't mean it's a well-executed trade. It means it could be creating a habit that's a problem for you to have to deal with down the road. Worst possible thing that can happen is to hit it big as you're new and learning to trade, because then you become very easily addicted to random rewards and poor execution habits. And it's all going to be back to execution. Huge thing to pay attention to. So if you go back to my futures trades yesterday, I was not happy with my entries on a couple different trades before lunch, and I ended up taking a late lunch, but I found myself having to hold them longer to get out at break even or slightly in profit because I didn't enter them well. So the entry point was not as good. So I went back to the drawing board a little bit mentally and was like, okay, what am I missing? Why am I finding myself? Yes, we're trading in a range. I'm not trading the edges of this range. I'm kind of thinking there might be a break one direction or the other. And so stepping away from the screens, having some lunch, going, okay, what am I doing here? Why am I finding myself with now 2 in a row of my entries that I'm not happy with? What's wrong? And so that reflection is huge as part of your day. Do you journal your trades right as you're taking them? How do you track those? What do you do?
So I used to journal on paper, and I track them now just on a spread. So I'm just doing
Do you
that.
fill them in like when you take your entry? Are you putting it in right then, or do you just go back and do it later?
It depends on the trade. If it's more than, I'm doing it while I'm, when I'm taking it. But I mean, if I have to exit, of course, I'm, stepping away from just filling that out. But whenever I journal, I have entry, catalyst, reason why,
Yeah.
and what contract I took and what time.
Gotcha. So, but you're not doing it at the end of the day, going back in. You're writing while it's fresh. What you know, what the market conditions are or what the setup was, or, you know, what it was that initiated that trade. So if you're finding yourself journaling and not doing it as much as you should be or as consistently as you should be, because you get to the end of the day and you're like, wait, what was I thinking there? That's your clue. When you click buy, for us, we're alerting it as we buy it, and it's being journaled right there. In fact, most of the time, I keep a handwritten journal for one trade or one page per trade on everything that I do. So even if it's short, there's not a lot of data other than key level was this, I entered here, exit at this. I'll do like a little recap if it's one of the shorter time or more scalp trades, but most of them have about a half page of notes. Obviously not like, you know, every line has writing in them, but there's documentation of the trade. So when I flip back through my trades in the day, it's like, okay, and that's how I identified, because I put not happy with my entry on this trade. When I saw it twice, I was like, what's up with that? And for me, I don't know if it's me personally because of when I grew up, and I'm born in 1976, a little bit older than a lot of the traders here. Handwriting notes is way more important for me. And a lot of people, like, I was on the cusp. I had a Commodore 64 as my first computer when I was like 8. And while I use technology like crazy, I still like handwritten notes. And I do keep a written journal or the typed journal with the entries and exits, but the emotion part of it or the setup part of it or all the things that I'm thinking get handwritten on that page because I can look back at them and there's more connection mentally for me. So I don't know if you guys are keeping a typed journal in a spreadsheet or using Trader Forge or, you know, something where you can actually just have it typed in and it does all the calculations for you, but you're still finding yourself coming up against the same struggles, like running into that brick wall over and over. Keep doing that because it does make the calculations easier, but try out my one page per trade. Jot all the notes down, all the emotions you're feeling, everything you're thinking, where the market is for like a week. And if, you know, you don't like doing it, then don't keep doing it. But my guess is you're going to find out some interesting things. Same thing as journaling your food, your intake. You might find out some things you didn't think you were doing very much that you're doing a lot, much more frequently than you would like to be. And it will help you change those habits for sure. And that being said, it is very different, you know, from person to person, how they're going to be motivated. So if one thing doesn't work, try the next thing. That doesn't work, try the next thing. And I don't mean by like, you know, using our indicators, like if somebody uses a moving average or somebody uses, like I use anchored VWAP and the standard deviations, it doesn't mean try it 3 times and then give up on it if it doesn't work. It takes, you have to learn to drive the thing before you can say it doesn't drive, right? If you're in a car and you've never driven a standard transmission, it doesn't mean that it doesn't work if you don't know how to take it from first gear to second gear, or that you keep stalling it because you don't understand how it shifts with the clutch. Doesn't mean that the mechanism is broken. It means that you don't know how to use the mechanism. So jumping around too much is a problem, but I'm talking about journaling. I'm talking about tracking. If what you're doing right now is not working, find a different way to look at it, whether that's moving to handwritten, whether that's handing it to somebody else and saying, I know you don't understand most of this, but what's your overall, you know, what I wrote on here, what's your takeaway from what you see from these 5 trades in this day, what you see me putting down? And I think you'll be surprised.
Yeah, I agree. You have to see you have to see what you can't during a trade and during the day. You know, and having it on paper or, you know, just anywhere else to look back and, you know, notice, you know, you could really, I mean, that's what really, it's where you work on, you know, you're increasing your win percentage and just, you know, just simply just improving as a trader and just seeing where your mistakes are. Because a lot of the time, whenever you're in a trade, you can't really, you know, I guess remember and learn from your entry unless you know, unless you remember every single trade or maybe unless you take one trade a day. But it's just best to, start, because then you can look back weeks and, and on months, and you can realize uh, patterns and things that you might want to change and tweak. That's how you just keep improving as a trader. So
Yep.
it's really important to, yeah, just journal and document what we do, because then we could easily just look back and, oh, well, I shouldn't trade this time, or oh, maybe I should stop trading this setup, or maybe I should, and maybe I should trade this more.
For sure. All right. Well, I am out of time, so I will wrap up the recording. But if you guys have any questions, definitely make sure we're trying to frame this around what we're seeing members ask questions about, what we're seeing people struggling with or frustrated by. So the more feedback you can give us, if it's helping you and we're doing good, just pulling that information from what we're seeing in Market Talk and in our channels inside Discord. And I also kind of take it outside of there, what I see people maybe across social media just breaking their head doing. And I don't spend a lot of time on social media outside of looking at like macro type things, or there's a couple people that I follow because they're not going to be swayed by anything. They're just giving macro information. That stuff for me is what I follow. I don't follow other traders on Twitter because I don't know their background. I don't know their history. I don't know their consistency, their profitability, their win rates, any of those things. They just talk a big talk. So I don't give them very much energy. I guess that's the word I should use. But I do look and see what they're struggling with. Because you see somebody who's short and has been short for however long, and then all of a sudden they just disappear. Half their tweets are deleted. The unfortunate thing is a lot of people listen to them because they are the squeaky wheel. They're the loudest, sometimes with lots and lots of followers, way more than those that are good providers of content. So be really careful, meter your media diet. And make sure you're asking us questions, because that's what we're here for. So if you're frustrated and don't want to, put anything in Market Talk, or you're struggling with something, you can shoot Cruz or I a DM, or you can open a ticket if you can't get a DM through. And I unlocked my DMs. I was getting a bunch of spam there for a while, so I unlocked them down. But you can shoot me a DM directly, or tag me in Market Talk, or tag Cruz, or tag Analyst, and we are here for you guys. So let us know what you're struggling with, what you're doing, and we will be around.
Yep. Just ask us, you guys. Ask us questions. That's what we're here for.
All right. We'll catch you in Market Talk and on the trading floor.
Yep. We'll see you soon. Talk to you soon.
Bye.